Professional Trader's Guide. Short Selling for Profit 1. What is short selling? Definition: borrowing an asset to sell it immediately, aiming to repurchase later at a lower price and profit from the decline. Example: you borrowed 10 Tesla shares from your broker at $250 share and sell them for $2,500. Tesla falls to $200 share. You buy back 10 shares for $2,000, dumb the broker and pocket $500. 2. Step-by-step execution tools for index shorting. Futures E-mini S&P 500 or Micro E-mini Dow. ETFs. Short SPDR S&P 500 ETF or ProShares. Short S&P 500. CFDs, contracts for difference. Process: open a margin account. Meet broker requirements. Borrow the asset. Request shares, contracts, or enter futures. CFDs: sell immediately. Lock in the current market price. Monitor and exit. Buy back the asset when prices fall to close the position. Practical example: shorting S&P 500 via futures. Day 1, sell 1 E-mini S&P 500 contract at $5,500. Day 3, cover at $5,300 profit. Times $50 point equals $10,000. 3. How profits are made. Action: price movement results. Sell high, market, buy low. Gives. Profit: sell high, market, buy high. Gives loss formula. Profit equals times contract multiplier costs. Costs and risks. Costs: borrowing fees 0.3 to 3% annualized. Margin interest 6 to 12% on leveraged positions. Commissions 50 cents to dollars and 50 cents per futures contract. Risks: unlimited losses, no ceiling if the asset rises. Margin calls: broker forces position closure if collateral dips below maintenance margin. Short squeezes: rapid price surges force short sellers to cover. 5. When too short effectively. Ideal scenarios: technical: downtrend confirmed by 50-day MA, crossing below 200-day MA. Overbought RSI, plus bearish divergence. Fundamental: recession signals. Geopolitical shocks. Index-specific setups. S&P 500. Short: when VIX greater than 30 plus Fed rate hikes. US30. Short after lower highs in an uptrend plus declining industrial production. 6. Real-life examples. Example 1. S&P 500 crash. Setup: COVID-19 panic plus VIX spike 285. Trade shorties futures at 3,380. Exit: cover at 2,200. Profit: Wu Shimei Yuan, Dongyu Mei Yuan, Wu Wen Zhou 10 contract. Example 2. US30 bear market setup. Fed rate hikes plus inflation surge. Trade: short ProShares ultra short Dow 30 at $25. Exit: cover at $35. Profit: 40% gain in 9 months. 7. Ethical and regulatory considerations. Market rules. Key restrictions. US SEC regulation show. Uptick rule for stocks. Naked shorting banned. India SEBI bans ETF shorting. Stocks only on approved list. 20% circuit breakers. EU UK. CFD leverage capped 134. Retail. Short disclosure above 0.5% of stock. ESMA bans binary options. Ethics: critics accused of amplifying crashes. Defense: provides liquidity, exposes overvalued assets. 8. Final advice for beginners. Do: start with inverse ETFs to avoid leverage borrowing costs. Use stop losses religiously. Paper trade strategies first. Don't short low float stocks or during earnings. Ignore macro catalysts. Trader habits: short only when the trend, fundamentals, and volatility align. Treat it as tactical, not a buy and hold strategy. Best instruments for beginners: S&P 500, SHETF, US30, DXD ETF. Risk control: never risk 1% of capital on a single short trade. Short selling carries significant risk. Consult a financial advisor and test strategies in a demo account, as performance does not equal future results.